All right, so we're looking at the headlines from the past 3 weeks, and there's been some really interesting headlines as it relates to SoftBank, Opendoor, Zillow. We're going to go through these right now. Before we get started, if you're new to this, please like and subscribe. We're going to put out some more good information about headlines that are hitting. We're going to dissect them, and we're going to have some great podcasts coming in the next couple weeks. First thing is SoftBank. So SoftBank announced that they're going to have a longer startup winter because unicorn founders are unwilling to cut evaluations. So let me share my screen with you real quick. This is the company that is behind Opendoor. It's behind Compass. I believe they were involved in Theranos, if I'm not mistaken. But the 64-year-old has said that, let's see, what did he say here? Winter may be longer for unlisted companies. Despite many of them raising record amounts of funds in recent months, last month they raised $800 million in a new financing round that valued the firm at $6.7 billion, down from $45.6 billion a year ago. One of the most valuable startups cut its valuation by 28%. This can show that there is trouble on the horizon for SoftBank. They've been pumping money in these companies. It's going to be interesting to see what happens with Compass, because if you look at one of my other videos, and there's a link to that below, you'll see that Compass had burned through about $188 million in capital, and they had about $476 million in the bank. I think they've got a line of credit for $500 million. But we'll see next week on the 15th, they are set to give their quarterly valuation and see how much money they burn through. So that is the first thing that we have going on. The next thing we have is Opendoor. You may have heard this headline, but Opendoor was slapped with a $62 million fine for allegedly misleading sellers. Okay. This is a big stain on Opendoor. I talked to some people on the inside. I don't want to say any names. They're claiming that this was due to issues when the company first came out. Okay, but it's a big stain for Opendoor. It doesn't give a lot of consumer confidence if the people that are trying to sell their home realize that they have been slapped with a $62 million fine. So this is something that is big news in the real estate industry, and it leads you to believe, are these companies going to be able to last? They were running on very thin, if not negative profits, right? Last time I checked, we had an issue with Opendoor, and they were selling properties off market, cutting out the agent. Well, we're going to get in that into a second here, but the way that real estate agents sell property now is different than it was the last 3 years ago, right? So what agents really need to realize is that they're going to have to go back to the basics on selling property. And one of the ways they're going to need to do that is have a solution for sellers that want to invest the time and energy in possibly selling their property off market to investors. Well, any good agent is going to have these, right? Next headline is that, let's see, Zillow is partnered with Opendoor, and sellers can sell their home direct to Opendoor through Zillow. Well, Zillow ditched their program for instant offers. This is a solution for them. This is horrible timing for both Zillow and Opendoor. It comes just days after the announcement that Opendoor was allegedly misleading consumers and fined $62 million. I'm a big fan of Zillow now. I think they have run a tight operation. I'm not quite sure if this partnership is really good for them. But look, here's the bottom line, is that if a seller is going to sell their home to an institutional buyer, they want, in the same way a seller should interview 2, 3 to 4 real estate agents, they should be shopping their home to 2 or 3 or 4 institutional buyers, i.e. iBuyers, okay? Well, there are plenty of them out there, OfferPad, Open Door, there's tons of them out there. And a good way for agents to capitalize on this is that they should be talking to their sellers and say, okay, there's an option for you to sell your home to these institutional buyers, okay? And you should do this before your home hits the market. So what they're going to do, agents, is going to say, we will shop your home out to every institutional buyer, every iBuyer out there that is interested in buying homes. We're going to evaluate your home on what they offer you minus their fees based on what we can get at the current market value on the market today. Okay, that way they can eliminate these, in most cases, by the way, that they're not going to offer as much as you could get on the open market. That's just a fact. I mean, maybe in the heyday of last year, they were offering more, but I don't see them spending more money than market value in the current market environment. So, agents have a plan, right? The next thing that we have is, it was in my huddle yesterday with my agents that one of my agents were saying that buyers are slow to buy because they want to time the market, okay? Well, I don't know anyone that has won by timing the Austin market, but my answer to this agent was, look, you have timed the market. We're down probably 5 to 7% where we were in like February. Yes, the market's gone down, and it goes down seasonally every year. We have the first quarter with the second quarter, those are usually good, and then the third and fourth quarter, they go down, and then we're right back up, okay? So my answer to them is, if you have a buyer that said they wanted to time the market, guess what? It's time now, because anything could happen that would boost appreciation and they lose whatever they've lost right now. As an example, we've got companies moving to Austin all the time. We've got Facebook, we've got Tesla, Google, Amazon, that they haven't even started hiring for these positions, okay? And another thing that happened just today is, let me share my screen here, is the CPI inflation rate is finally falling, much more than expected, okay? So the CPI inflation rate eased to 8.5%, retreating from June's 9.1% inflation rate amid falling gas prices, retail discounting, and the return of online deflation. It also says somewhere in here that getting supplies from one place to another has dropped, goods versus services inflation. This is good news. Now, the jury's still out on how long this will last. We really need to look at next month's numbers, but this is a prime example of why consumers should not try to time the market any more than they have already. Interest rates are down, they're down below 5%, that's gonna go up, it's gonna go down, but like they said before, the saying in real estate is marry the house, date the rate, right? I believe that we will be out of this in March. I'm not saying we're going to soar, but like buy your home now, if your interest rate's 5% and you're getting 10% appreciation, which I honestly believe we're going to get between 8 and 10% appreciation from March of, let's say April of 2022 to April of 2023, this is a good time to buy. Agents need to be educating their home buyers and home sellers. And that's another point that I have is like we're hearing agents on Facebook, social media, oh, the market's bad. Well, it's not a bad market, okay? Homes are selling if they're priced right, okay? This is gonna be a self-fulfilling prophecy if agents keep talking about the market being bad when it's really not, okay? I think the agents that are talking about this are not looking at the bigger picture, and that we have more inventory. Yes, we have 30% less pendings. But all in all, this is not a market that is slowed or stopped by any means. So, got some links down here for the articles, and like and subscribe. Got some good stuff coming up. Thanks for your time.